All right, everybody, welcome to the session here. My name's Rodrigo. We're going to be here with Nick Shaheen, lead trader from the Options Inner Circle chat room. Couple things here. We got to give a couple shout outs to some people here. Bob, what's going on? Inga, Grizzly, Yanzi. We got a couple people in the chat. We're going to get this started here. Just keep in mind, we will be talking about trade ideas, setups, options, condors, butterflies, all pretty much options related, right? So I have Nick Shaheen here in the back, and make sure to stick around until the end, because we will be giving you a live view of Nick's trading room. So let's go ahead and bring on Mr. Nick Shaheen. I think we have him there in the back.
I do. I'm here. I'm right here.
Yeah, what's going on, Nick? How are you?
Good. A little tired. This weekend has been complete work for me. Everybody's nervous about what's going on with the market. There are opinions this way and that way, and now I'm seeing. I don't listen to news, if you know me. I know what's going on just because I read some headlines. I go on Twitter, but I don't click on the opinions inside the news. So I'm trying to see how come Jim Cramer is making it into my stream a couple of times as to people quoting stuff he's saying, and something about Credit Suisse. Is there a rumor about Credit Suisse? Oh my God, what is happening? Here's what's happening. People don't know what's going on. By people, I mean the experts. So it's been difficult for everybody to trade. So if you feel a little lost, don't blame yourself. Don't think you're stupid. Don't feel like you're the only one. The experts don't know what's going on. So the way we've been winning every day, we have been trading the not the opinions, but rather the charts and how people are reacting to what's going on in the news. If you follow the news, one day they tell you everything's fine. The next day they tell you everything is not. If you noticed last week, we had strong days and then complete letdowns. Like, for example, one day was super strong, and I'm saying everybody started wanting to buy. And I said, listen to the VIX. The VIX is 30. That's a representation that the actual people that establish the options markets are nervous. So basically, if the insurance company is charging you a lot of money to insure your car, that means maybe your driving behaviors.
Right. Okay. So for everybody that's here, right, put a 1 in the chat if this is the first time that you're watching these sessions. Put a 2 if you've already been here, and put a 3 if you're a member of the chat room, so that we can get a sense of where we take the conversation. All right, ton of 1s there, Nick.
I like it. A lot of 1s. I like it. Inga is a 2. The only two I see is Inga. Hi, Inga.
So how was the meeting today? Do you have a meeting every Sunday?
It was interesting. I did 4 videos today. Usually I do 3. Today I hit the button. I hit stop too early. And it was so. In case you don't know, on Sundays I request tickers from my members, which you can be, and I go through their charts. And today's list was about 140 charts. Usually it's between 130 and 170. So that's a lot of work, but that's work you have to do. And if you don't want to do it, I can do it for you. And what I delivered our 4 videos. I know it says 3, but I hit the button too early here somewhere. I stopped at TSM. I was like, wait, that's not, or TXN. It wasn't the end of it. So I had to do another video for these. But nonetheless, this is a list where they can refer to at any point in time. Click on the charts and come up with the charts, and my comments are in here. That's a lot of work, but that's important work, because if you've had any training with me, part of it would be that homework. You can't avoid homework. You can't succeed without homework. Otherwise, you're just winging it. So if you don't want to do the homework, I'll do it for you. And so Sunday, I do a webinar live for everybody that wants to be there. Today we had 67. I can't remember. Let's say 65. And those who did not attend will have the videos to watch. 4 of them, and they can fast forward, and they are alphabetical. So this is an important step, and it's handed to you on a platter if you don't want to do it yourself. I do encourage you to do it, and then ask for me and see if my homework and your homework are agreed. Because if that's the case, then we're both on the same page. Maybe that opinion is strong. So yeah, the meeting was great. It went by quickly. There were a lot of people from Florida, and they made it. We even have a person on San Marcos, and Annie made it. I reached out last week. I hadn't seen her, and so tough times there. And hopefully, if you're there, you made it. Made it physically, and hopefully your property also made it. So today I thought we would just give some options knowledge to show alternatives as to how options can help somebody trade better, and even if they don't trade options already, and maybe to demystify options altogether and establish a little basics, because I see a lot of 1s and only a handful of 2s. So maybe we can do that.
Right. No, and definitely, and don't forget to tell them about your special daily Iron Condor that everybody's talking about. Everybody loves doing that.
So in the options room, in the live room, options, that's a Freudian slip. So part of the service, an additional part of the service, is I provide myself live to you with this boom mic and my screen, as you will see in a little bit. I'm going to take over the screen. This picture of you and me is making me dizzy. So hold on for a second. Let me see. Where is it? Spy. There it is. Okay. So you should be seeing my screen. So during the day, every day, without fault, I share my screen live, believe it or not, about 9 hours and 20 minutes. And I have about 260 to 320. We've had almost 400 at one time on Fed days. Fed days are busy. So I provide myself, I give you all of my time during the day in order to trade better. Not everybody can be there. So these are trades that are usually on the faster side, definitely intraday, maybe overnight swings, and we discuss everything else in between. So if somebody does not want to trade fast, they just have a quick question about their trade that's 6 months old, they can pop in and say, hey, Nick, I have you here. Can you answer this question? Sure. Or somebody goes in and says, I don't know how to do this. I don't know how to do that. We can do this. But one exciting part, when the day opens, we have the SPX. The SPX is the index, the ETF that represents the S&P 500, right? You all know it. It's the SPX. And it has options that expire every day, which makes it interesting, because now you can make trades every day, which we do. So every day I share a trade. Like, for example, tomorrow is the 3rd. This contract will be live. Wait, no, is it the 3rd? Yes, tomorrow is the 3rd. So this contract will be live. And we can go in and make some setups that expire the same day. See, after tomorrow, let's say 0 days. So these are what they call 0 DTE. So 0 days till expiration. So the trade that you put on dies that day. It's exciting when you're selling. So what do I do at the open? The market expects about 50 points, maybe 60, up or down, depends. That might change by tomorrow. And so I'll set a trade, about 100 points lower and 100 points higher. And I try to eke out 20%, sometimes 25% in one day. So we set the trade and we see if we can kill it in one day. These are called iron condors. I almost said Iron Maiden. So this is the SPX day by day. So that's one day, that's one day, that's one day. So on this day, it would have been easy. The range was small. This range was trickier, but we had success every day this week. And we set the trade, and not everybody have to. I didn't catch all the trades this week for myself. I had at least one a day. Most often I have two for me. And then intraday, during the day, we have a lot of opportunities for faster traders. And we have a whole mess of faster traders, and they share their own trades. Like I would have said right here, okay, it's time to go short once they lost that, because that would have been the target. And you can see the technicals work out. Interesting level, 36.19. So keep in mind for tomorrow, 36.20 and 36.25 and 36.30. Not going to be easy for the SPY. In fact, I want to put a box. Since I'm here, I don't want to do the homework twice. Okay, so this is an important spot. There are going to be sellers in there. So this is what we do all day. And more importantly, a lot of people in the chat room share their own trade ideas, and some of them are pretty good traders. I see some people that are swing traders that share their opinions. Okay, I'm buying a call for 3 weeks. This is the call I'm buying. I'm buying a put for 2 weeks, for 2 days. And this is the put I'm buying. So they share their opinions. And they have we have other people who are super fast. I'm long here, I'm out here. I just got filled, I just exited. So whatever your style, you'll find a friend. And I can guarantee you this, inside the live room, which is what this is, if you spend a few days there, you're going to level up your game. You're going to learn a few things that you didn't know before. All the comments are super technical, but they apply to any time frame. So if you're thinking, oh, I can't make it because I can't trade that fast, it doesn't matter. Like if I say there's resistance here, that concept applies if this was 5-minute chart or 1 day chart, which is multiple months. There's resistance here, there's here, this was resistance, this too, this too, this too. So the concept applies. Look, if you cover up that D right there, if you cover up that 1 day, all the comments I make will be exactly the same, whether we're looking at this chart or the other one. The concepts are the same. The machines trade the same way, and they are incredibly accurate, the machines. So I make you the promise, if you join a group, you will become a better trader at the short term, at the long term, into options, into other than options. So we don't just do options. We have crypto. We have a few FX traders that are creeping in, although that's not my strong suit, but I can opine on the charts. We have futures traders who are bulletproof, and some are learning. A new subscriber, his name is Pravit, he comes to mind. He's trying to make a go at it with futures, and he's made a few mistakes, but he's a lot better now. So he comes in middle of the day. Thank you for your levels this morning. They were great into trying to help me trade. So what happens is every morning I post my write-ups inside the chat room. This is not the live room. This chat room right here is for you to pop in here and discuss whatever you want at whatever speed you want. Like right now, you can come in and ask me a question. I'll be in here. You can direct message me. You can read my special notes in here. Like I just offered them 4 videos. And after I get off here, I have another hour to go. I have to write up a strategy meeting. A strategic market update is what I call it. It's like 7 to 10 minutes as to what I expect this week. This week, major potential moves up or down. I mean, can we cuss? This crap show that's going on has to end. Not has to end, has to start to end this week. So if we don't get a 1.2, 1.3% rally by Tuesday, I think we're going to fall 2.5 to 2.8%, and it may carry lower. So I don't want to scare anybody. I'm optimistic. I'm the guy that says we can still make a new all-time high this year. If
Nick,
not this year, early next year. Powell is doing bad things. And 2 months ago, when he started saying he wants to do bad things, I said to everybody that listened, if he does what he wants to do, I guarantee you he's going to be forced to stop and restart a QE. 2 months ago is when I said that. I'm on record. You can look up. So now I'm hearing rumblings from those experts. I've been screaming in my head, where are these financial experts, the JP Morgans, the Goldman Sachs, all these Buffett, all these brainiacs? Where are they not speaking up to the fact that, dude, you're breaking the world? What we do here impacts the world. What is that statement that the US exports inflation? Go read up about it. We break countries financially by what we do with our bonds here. We're sending bonds to the toilet by raising rates like that. Anyway, he's going to have to stop.
Nick, can you explain for the folks here, why is it that you like to do credit put spreads? That's your bread and butter. And if you don't know what that is, folks, don't worry, Nick will explain it. But why is it that you like doing that trade over?
Okay, so the easiest trade in the world for me mentally is to do some homework on a company that, for example, I'm going to choose a company. I'm going to go with Meta, which is not the most favorite company on the planet for people for some reason. This is a company that has about 3 billion sets of eyeballs active every month, every day. I mean, they can sell chiclets and they would still make money, right? They can do whatever they want and they make money. They create, I don't know, 50, 60 billion dollars in cash from operations every year. I believe that's an accurate number. I'll double check in a little bit. And it's going out of business. Basically, the chart says it's going out of business. It's almost a single digit PE. And it shouldn't be a discussion of PE. So why do I like credit put spread? I can do my math and I can look at the P&L and I'll open up the P&L of this company ABC, and I look at the income. Whoa, okay, so the income is, let's go to annual. Look at how every year it grows its sales. Every year it grows its profit. Okay, so on the quarterly basis, maybe it's not growing as fast. Neither is the world. Profitable for sure. Net income, 30 billion. Overview. Yep, I was right. 60 billion in cash from operations. Let's say 30 to 50, 60 billion. Valuations. Price to sales, 3. That's as cheap as Amazon almost. I haven't seen a gigacap this profitable be this cheap since Amazon. And almost a 10 PE, 11 PE. What? Is this cheaper than Exxon? It probably is. And this company grows like gangbusters. Organically grows, not because the price of oil is up like at Chevron or Exxon. So this is a company that financially we can say is on solid ground, at least, right? If not an excelling company. And then it's falling to a level that's lower than the pandemic. It is literally lower than the pandemic. It is as low as 2018 and almost as low as 2016. So by definition, this is a bargain. And at least I can say that if I get long here, I'm not necessarily making a financial mistake. I'm not chasing like people who went long up here. So up here, I would not say the same thing. Up here, I would not say the same thing. Up here, I was not saying the same thing. So down here, I'm comfortable going long. So you go long by buying shares, which is not wrong. If you go all in, it is wrong. If you take a 20, 30% stake of your ultimate size, okay. Going long all in is not good. However, I like to go long and leave even more room for error. What does that mean? It means that if I scratch up here, so this is where it is. I can go long using the credit put spread strategy. It sounds fancy, but I'll explain it to you. And say take one here in the 2 digits. So so if the stock rallies, I make money. If the stock does not rally, I make money. If the stock falls, I make money. If the stock collapses, I may lose money. As long as it closes on expiration day at or above my strike, I win. And even if the strike falls, I may still win. Okay, there are ways to manage the assignment to win ultimately. by selling this protection leg and all kinds of little tricks. I can even delay it by punting it out in time. So that box is my trade. Believe it or not, when I open the trade, I get money put into my account. What? Yeah. I don't spend any money. It goes into my money, comes in to me. And then I'm obligated to wait. Time expires, I win. So the risk I open is finite. The stock can go to zero. I know I can lose that much and not more. If the stock goes to 1 million, I know I cannot make more than what I collect. So that's the downside. However, what's wrong with collecting 10, 15% consistently all year long by doing trades like these? So this is called a credit put spread. This is half of an iron condor. So if I do this and I do a credit call spread, which is the opposite one, this would be an iron condor. If I do trades like these, then they're hedged. If price rallies this way, this one gets in trouble, this one does not. If price falls, this one gets in trouble, this one does not. And if price goes like this, they both win in the end. So I double my income. I drop my maximum money at risk because I can't lose on both ends. Price either can go do this or do that, but it can't do both at the same time. All right, so this is just quickly why I like bear call spreads or bull put spreads, they call them. I like to call them credit put spread and credit call spread. And if you want, we can jump right in since you asked. So let's say we're in the live room and the chat room, and somebody says, Nick, I really don't understand what is this credit put spread. How do you write it up? In fact, last week somebody said, what is a diagonal or what is a calendar? So I jumped in there and I had a whole session on it. I would jump in and I would explain it. So this is an options contract. And if I go to Apple, which is the easiest one to explain, if I go to November, how about I go to November? Yeah, this is good. So this is Apple for November options contract. So if you don't know what that is, don't feel intimidated. It is not that crazy to understand. So I'll try to go through the easy explanation of it. So what are puts and calls and all of that. So let me jump in here and start with that. So the options are contracts, so they have a buyer and a seller. I chose, so every contract usually you enter into, it has terms and conditions. In this case, let's go through the main terms and conditions. Everything you see on this page is about Apple. That's one. Everything you see on this page, quantity, is 100 shares. So that we've just had two terms, Apple 100. Everything here is 100 shares. Everything here has 47 days on the clock because I chose November. I could have chosen December. I could have chosen this Friday, coming Friday, 2 Fridays, 3 Fridays, 4 Fridays from now, 5, 6, November, December, January. I could have gone out to 2025, 2024, up to me. These are called leaps, those ones out there. I think 12 months and above, they start calling them leaps. They're not special. They just different name. I mean, different terminology. Sorry about that. I need some energy. Okay, so so those are 3 terms. What else? Price. Okay, so what does that mean? I'll start by explaining the one side of the equation. So they come in 2 flavors, options. We have puts, we have calls. The puts, neither are bullish, neither are bearish. Okay. Yeah, you can ask questions. We'll pick them up on the fly. What you do with the put and the call makes it a bullish or a bearish scenario. The misconception is that the puts are bullish, puts are bearish and calls are bullish. Not necessarily. Okay, so let me explain the put side from the protection since we are freaking out. If you owned 100 shares of Apple and you want to protect them for the next 47 days, so you would go out there and you would buy a put. So if you buy the 120 put, you spend $280. Why? Because it's 100 shares times 2.8. So $280. And this does what? It guarantees you a sale at 120. So if Apple does, you can call up your broker and say, sell them at 120. Because you paid that much money, you have the right to do that. The seller of that put is obligated to take those shares from you. They wake up and they have your shares in their account. You don't need their permission. They're obligated. So that's the put side. When you buy a put, you give yourself the right, not the obligation, to sell your shares at that price. What does that mean, not the obligation? When you buy insurance on your car and you have a fender bender, you don't have to report an accident. You don't have to file a claim. Okay. So how do you do that? You just go in here and you take one contract and you say preview and you pay $280 and that thing is open. You can change your mind an hour later and sell it for partial gains or losses. What do you mean? If price falls, this 2.8 becomes 500. Let's say it falls and then you're comfortable with your position and 2-3 days later you learn something new. It's like, oh, whatever I was worried about now is gone. You sell the option for more money or for a little bit less money. I wish I can do that with my car insurance. So that's the way you do it. Now, do you need shares in order to buy options or sell options? No, you do not. Puts or calls, you don't. But Nick, you said I buy insurance. Yeah, but you don't have to. If I wanted to short a stock and I don't have shares, I would buy the put, because if I buy the put and the stock falls, that put becomes more expensive. Look how more expensive these guys are because price has already gone through them. Okay, so this one is only 280. So if price falls, it balloons, and then I just sell it. So you're still thinking that the puts are bearish. So let me tell you why it's not. So let's go to the scenario where you own shares and you buy the put. You're not bearish. If you were bearish, you would sell your shares. You wouldn't buy insurance. I wouldn't buy insurance on a car I was going to sell. I don't like, but I like it. I want to keep it. I buy insurance to keep it, right? So what about the seller? The seller of that contract, the seller of this, wants my shares. So he or she also are bullish Apple. They just want it at a cheaper price. So the buyer and the seller of the puts in this case want the shares. So the only time the put is bearish, the purchase of the put, is when I do not own insurance. I do not own stock. So I'm just buying to hope that the price falls so I can make money. Like those who bought puts before the Apple news came out, the fake news that came out about them not ordering. What a BS story that was. They made a lot of money because they bought the puts. They were cheap, and then Apple fell apart. Instant money for them. Then they turn around and sell it. They make money. They don't even need to buy or sell stock. Okay, so that's the put side. How about the call side? Let's say you want to buy Apple for the earnings that are coming up in about, I don't know, 3 weeks maybe. So what do? You can spend $10,000, $20,000, $30,000 buying shares, or you can spend $770 to lock your price at 140. So if I buy a call, that's what I'm doing. I'm locking my price at 140. I don't have to buy shares. I'm saying if I want to buy shares for the next 47 days, this guarantees me the right to buy the shares at 140. If I do it here at 145, it's cheaper. If I do it here, it's cheaper. Up here, it doesn't even cost $100, but look how much Apple needs to rally for me to be in the money, right? So I do it here, it's $700. So don't ever sell a call if you don't own shares. Ever. Nobody in my family is allowed to do that. Oh, I'll do it for 10 minutes and make, no, not 1 minute. Those who did that with GME went bankrupt, like liquidated completely, gone. I do not short outright in this environment. So selling a call naked, meaning not owning shares and selling a call, is financial suicide. It's very unlikely it will happen, but if there's this much chance it will happen, I am not in at all. When I'm taking a risk, I'm a risky guy. I fight for a sport. I used to race cars. I've competed in all kinds of very aggressive sports. I'm an adrenaline junkie, but not when it comes to financial. Nope, I'm a chicken. I'm very conservative. So I would never sell a naked call in this environment. I have done it before, but in this environment with WSB, whatever those things, those guys are called, I would not do it. Okay, having said that, now you have a little better idea as to what options are. The put, if I buy it, it gives me the right to sell something at a price. The call, if I buy it, it gives me the right to buy something at a certain price. So the question was, why do I like credit put spreads? Because I can do a trade that would bring me money and without a lot of risk. For example, this one right here. This is a credit put spread. I sell a put and I buy a put below it. One trade. If I do 10, I collect $560. And all I need is for Apple not to fall below not to be below 114 in 47 days. So if we go to Apple, let's put a visual on that one. I need Apple here in 47 days, not lower, and I win. Okay, so that's the trade. This is just one version of it. Now, let me walk you through it as to why I would do that. The first version of it is, hey, I want to buy shares of Apple. If my brother comes to me, I want to buy shares of Apple, and I'll say, listen, I'm with you. The company's great. It's just fallen a bunch, but it still has a lot to fall before it gets to its pre-pandemic levels, which is true. This was where before COVID, and look how much higher Apple is. It's still, what is that? 40% above its pre-pandemic levels. And if you remember, that was a spike into a new all-time high, like a 20-30% spike out of nowhere, which was completely ridiculous. So for all intents and purposes, this is still more than 50% above normal levels before the pandemic. And it's still right here. So it has a lot of room to fall and still have a lot of fat. So I would tell my brother, listen, I'm with you. It's a good company. But what if the markets crash? You want to build a buffer. So how about you build yourself, I don't know, 20-30%. And instead of buying shares, why not sell a put? And if you don't trade fast, you can go out in time to December and sell a put even lower. So I can go to December and say to somebody, listen, I'll buy your shares at 100. They'll say, thank God. They'll pay me a premium. So if I wanted to buy 1,000 shares of Apple, I would collect $1,200 tomorrow morning for doing that, for promising someone that I would buy their shares at 100. So I would be long Apple down here. That's the worst case scenario, is that I would wake up one day and I have Apple shares in my portfolio, and I paid $100. So I would break even at 98.78. So in this scenario, now this is not a recommendation to go sell puts in Apple, okay? But this is just a visualization as to how things work. And that is selling a put naked to buy shares. I would only sell puts if I really want to buy shares. That's super exciting to me. I did this during the pandemic in AMD. I promised somebody I'll buy their shares at 20. AMD, 20. They paid me $2,200 twice. So bring them. And if it happens again, I'll do it again. So this is the type of trade that I like, where I leave room for error. Somebody's panicking. They want to buy insurance. I do my homework. The company's fine. I say, I'll buy it, and I'll leave a 30% room for it to fall further after just falling 20%. Those are the types of trades I like. And I don't do them when the stock is rallying. For example, when Apple was up here, I wouldn't sell naked puts because I know it's super inflated. People want to buy when everything is running. Our instinct is to chase. Our human instinct is to chase. We're animals that like to chase because we don't have claws. We're smart. When some of us, when we see a herd of humans running out of a room, we have the instinct to turn around and run with them, regardless of what's going on. I keep telling the same story over and again. When my son was like 12, we were in Cancun vacationing. We were body surfing, so we were in our water to waist deep. I had him and a friend of his, and then we see a barracuda that was bobbing up and down. So I was like, oh, look at that barracuda. And then it disappeared. Like, okay. And then we see it coming towards us. So I turn around and we start running, laughing. I mean, it was maybe danger, maybe it wasn't, but instinct was to say, let's book it. And this lady was coming towards us. She turns around, starts running with us. And after 30 seconds of running, she goes, what are we running from? And that's the case. We have that instinct to turn around and run. And if you do it in options on the way up and on the way down, if you panic on the way down and you sell out and you buy puts, you're going to lose money. If you, what's the opposite of panic? You get overly exuberant on the way up and you chase late, you're going to lose money. You're opening yourself to losing money. So we resist the urge. We in stocks, when we see a drop like this, I'm looking for opportunities. Who's panicking where? And can I stick my head in the room to see if there's strong fire, or is there a chance for me to jump in and see who left a wallet or a purse, to see the opportunities that are left behind? So that's to return them, of course. And that is the thing here, the thing that they call FOMO. That's how it kills us. Using options, you have ways of controlling that FOMO. This is one of them. If Apple is falling out of control, I guarantee you somebody's panicking. Oh my God, what if it goes down to 50? Okay, I got your back. Let me take them off your hands at 50. I'm just saying. I have sold puts at Apple at 60 before it split ever. Right after they announced the iPad, I think it fell 40% when somebody went in the news and said they put a target on it at 11.11. I said, somebody, a friend of mine who was super good with Elliott Waves, he said it's going to 70. I said sold to you, and I sold puts at 60, and they paid me over $1. So find your opportunities. Find your opportunities when people are freaking out. See if you can make money off a freak out. Like they say, what are you going to do with the earnings? Nothing. I'm going to wait for people to react after the earnings, and I'm going to make money off of that. Period. End of story. The other day, a stock reported, was it Nike? Somebody else. It fell apart after hours, and I said, this is a buying opportunity to $46. I said, before they reported, I said, if it falls to 48 or 45, it's a buying opportunity based on the options. It should bounce. And as soon as it fell after hours, I said, I would buy shares right here. Boink. Right after that, 20, they rebounded back to 50. I can't remember the stock. Something like Oracle or something like that. One of those caliber stocks. I can't remember. So anyway.
Hey, Nick, we're getting a lot of questions here about the live room. We're just going to go through these questions really quick, and we'll get back here into the session. Thanks a lot, folks, for sending these in. So, all right, let's just get through this really quick, folks. Are the sessions on Sundays recorded? Yes, Tim, they're recorded every Sunday. Nick will post it in the chat room. Does everybody that joined get a free laptop? Yes, Sam, that is correct. Everybody that joins will get a free laptop until midnight. What is the chat room schedule? So the blue chat room is open 24/7, and the live room is 9 to 5 or 8:30 a.m. around there to 5 p.m. every single day, Monday to Friday. So that's pretty much the schedule there. Is there a money back? Yes, there's a 30-day money back guarantee. The price at renewal next year, it's annual. Next year is going to be the same. It's 70% off. Let's see. Does Nick provide education? Yes. Well, he's going to show you some videos that he has. We'll go through those as well. Let's see. And how much capital is required to do the trades in the chat room? I know there are SPX trades that Nick does. Iron Condors that, is like $400 a trade around there. So yeah, you don't need a huge account to do these trades.
No, you don't. So as far as how much you need money, here's how it is with options. The bigger the account, the easier the trades. I have people that have been with me for 9 years. And I know for a fact that one of them reports to me every time. He reports to me his progress almost every year. He makes 6 figures consistently every year. The last report I had was sometime in February or something like that. He had already made 200,000 from selling spreads. So not everybody can do that. But the trades I just mentioned, the Iron Condors and the SPX and Apple and all of that, if you do one contract, you can make $100 and by risking $400. So it sounds wacky, but let me rephrase it. That's 25% yield in one day for the SPX. For Apple, it's for a couple weeks or so. Depends on how long the trade is. For example, if I do 10, I would make $1,000 and risk 4. What can I risk $4,000 on? Let's say I buy $4,000 worth of calls. I would need a 25% rally to match these trades. These trades don't require a rally. They're self-hedged. So one contract will require a maximum loss of $400. That's it. So I have an account that has under $2,000 and I keep it there under 2,000. I keep taking money out so I can trade realistically. You can also do similar trades with the IWM, with the SPY, and they're a dollar wide. So they require even less money. So you're not going to be hitting, as they say, 4 baggers with these trades, but who's gonna be upset with 15 to 25% in a day, in 2 weeks? Remember that the stock market's return, what is it, 13%, 14% over a lifetime per year? We're doing more than that a day. Every once in a while, you blow up. The trade doesn't work. If you don't let it go to maximum loss and you book early or you roll early, it's a good way of making a living. but you have to practice. So you join the group and you jump in with real money. Mistake. People do that. I can't beg them enough to not do that. Where's the rush? You're subscribing for a year. Take 3 months to learn it. I mean, take some time. It depends on how smart you are. Here's a person that literally, my phone just made a noise. I opened my message. I've been in your room off and on for several weeks. I'm reading the message that just came in. And I see you call the SPX close correctly several times. That's pretty impressive, right? It's a lot of fun. And I would like to learn how to calculate the close using the options data, which is what I do. Period. Like, yeah, that's funny. I can't teach this in over the airways like that. You know, I have taught it live, and even then it just goes over people's heads. I put people on the right path, and it's up to them and their intelligence to be able to discern it. So I give enough information for people to learn it. But that one concept, pinning the close, takes years, if not decades, to master. And some people never get it. I have a good friend of mine, never gets it. We hang out at parties. I teach him over and over, never gets it. So I don't promise teaching that part. I promise sharing it every day and teaching the rest. Now that pinning the close is a science all by itself. If everybody can pin the close, there will be no casino. If everybody can read the cards at the blackjack table, there would be no blackjack tables. So every once in a while, people come that can count cards and win at blackjack. And that's me and several other people that I see out there. Not everybody can do it. I'll share the knowledge, but I cannot promise you will learn it. I will promise that I will share it with you every day. What broker account do I use? I use E-Trade and TD Ameritrade. I don't recommend either. If I were to recommend one of the two, maybe TD Ameritrade over E-Trade. It has a lot of bugs.
Nick, can you show did you show already the videos?
Oh, I did not. Okay,
yeah,
so
it's like the beginner.
here's the deal. We've been talking about the live room the whole time because it's very exciting. Not everybody can be there. People have jobs. If you cannot be in the live room, you're not missing anything I'm promising. Everything that I promised in the service is not for the live room. The live room is all extra, 9 hours of extra. The promise is I'm with you in the chat room where I post my daily write-up in the morning before the market opens, and updates during the day, and a trade setup during the day. I'm also promising you some training videos in here from what's a put option, what's a call option, what's a spread, what's a credit spread, what is a cash settled equity, and what isn't. So you have those. And if you want special training, I'll send out videos on demand. I promise you, if you have questions, my trade is going this way, I'm trying to close it and saying I need infinity. You pop into the chat room on your break. Whoop, that's not the chat room here. And you send me a message. Hey, this person right there was hesitant about sharing his, about sending his order without sending it my way first. So he sends me the picture of his order to see, does this look right? And it didn't look right. I said, something is wrong. Go back and restructure it until you get that. And he did, and it worked. And now he sent me his trade setup a couple of times, I think. This person here sends me his results, and they were fantastic last week. And questions. Same with this person. Same here. Sometimes you just need somebody to say, yep, you're doing it right. And it's just an extra. Let's say you have a trading idea. Hey, Nick, I heard so-and-so. What do you think? I'm looking to do this. And when I do that. Okay, so companion 999, when I'm writing credit put spread, to use some rules of thumb. Okay, a companion, for me, it's very easy when I do a credit put spread. Okay, so why do I like credit put spreads? Those trades that I said, for example, Apple, I said I like it way down there. So when you buy shares, you assign yourself odds of success. But in reality, it's 50-50. You do homework to think that you have the edge over your seller, your competition. Your competition, when you buy shares, you don't pick them up off the shelf. Somebody's deciding that it's time to sell Apple. You're saying it's time to buy Apple. One of you two is wrong. Only time will tell, right? So I set up trades that I don't care if it's going to fall or rally as long as it stays above my level. In other words, the buyer of shares is hoping the stock goes from here to here. The seller of shares is hoping it doesn't. I'm just doing homework. I find it easier to say Apple is not likely to go here or here. So the extreme bear and the extreme bull is wrong. It's almost always the case. And I want to sell a lottery ticket for the extreme bull and the extreme bear, and they're both losing lottery tickets. So let's put it on paper. Let's see here. If I go back to November, it's easier to demonstrate. So my brother does not do options. He's a surgeon. He's busy. He cannot be trading in and out. He says, I just bought Apple shares. And I'll say, okay, so what do you think? Oh, I think it's going to be at 170 by November. I'll say, let's go talk to the dealer and see how likely that is. So this is November. This is 170. So there's a column here called the delta. This guy right there. This is the odds maker. You go to that number and you see a 0.06. So there's not even a 10% chance that this happens. So I'll say, you know what, brother? The dealer disagrees. It says that there is very little, that's a small number, there's very little chance that Apple is, that's a little number, at 170 in 47 days. That's what that says. Very little chance Apple will be 170 in 47 days. So if you want to buy the stock, be realistic that it's probably going to be until February or March or April before you get there. That's all I would tell him. So even if he doesn't trade options, this is intelligence that the options data will give you. These are real numbers, folks. This is what the market runs on. When you've heard the term market makers, those are the people that sell the options. So when you sell an option, you're making the market for somebody. Somebody wants to buy insurance, you sell them insurance. You made a market. Somebody wants to buy shares, you sell them the right to buy shares. You made the market. And when you're selling stuff, like if you're selling insurance, ice cream man person. What? Okay, so if you sell them insurance, you want to know that if they crash, you can cover your money. So you want to sell them at a place that's likely for them not to file a claim, right? So this is usable information. So for me, it's easier to say that Apple is most likely not going to be at 100 or 105, and it's not likely to be at 165, 170 in the next 47 days. So what do? I sell risk here. I sell a losing lottery ticket for a super bear. I can sell a losing lottery ticket for a super bull. And I wait. And as long as Apple stays in between these two super big, wide range, I win from both. This person would lose and this person would lose. I keep the money from both. If I'm just bullish, I'll sell this one. I'll say Apple is not likely to be at or below 100 in the next 47 days. I'll take a risk. You like this? All kinds of scratchy. Okay, so that's why I like to do these credit put spreads, credit call spreads. And that's why I like to sell a very low delta. What does that mean? I'm selling an option that has very low chance of working out for the buyer. So I'm going to keep their money. That's why I go to at most 0.15 delta, 0.15 delta. So this is how I use delta. Other people, if you go and take another options class, they probably spend 20 minutes explaining what delta is. I don't need to. I'm telling you, this is my odds maker. So here's the definition of the delta, something along the lines of the amount of money that this option changes with the change of $1 of the underlying. Good luck trying to put that into a strategy. That's the definition of the delta. How much will the option change with the change of $1? That's why these are positive and these are negative. So if the stock rallies, the price of the put drops. And this is the amount it drops by every $1 move. Useless information to a degree. The better explanation of what is a delta, hey, use it to gauge your odds. So if you buy this 150 call, you have a 30% chance of success. You're thinking, oh, 30% is high. No, it isn't. 50 is coin flip. So keep things in mind. Like they say, it kills me when experts come on CNBC. There's a 45 chance of a reset, 40% chance of a recession in the next 6 months. 45% chance. That's like a little bit better than a coin flip. So it's ridiculous. The things people say are ridiculous sometimes. So keep things into perspective. Options are good that way because they allow me to see where market makers are putting their money. For example, you've heard on CNBC the Nigerian brothers go out and say they are buying the 150 call for November in size. I would say they are buying and selling. Every buyer, there's a seller. So to them, they look at the order and they see that it was done on the ask. So the buyer is eager. To me, the seller is always right because the seller is the dealer. So on one hand, they tell you what most options expire worthless, right? And on the other hand, they start pointing out the high options positions. Isn't that most options? Shouldn't they expire worthless? So 1 minute you tell me most of them, the biggest options are going to die worthless. And then on the other hand, you tell me to chase the most options out there. Doesn't make sense. Use your brains, folks. They are designed, the media is designed to screw you to a degree, not intentionally, but they don't have your best interest at hand. They want to capture your attention. How do they capture your attention? By eliciting some response from you. If the news came out and said, there's nothing really going on, maybe you don't want to watch, maybe you do want to watch. Hey, we're going to have pretty pictures and pretty people behind a camera trying to say some cool stuff, but nothing is going on. You're not going to watch. Instead, they're going to make a mountain out of a molehill. Oh, you're going to see the all-important Fed minutes. They're not that important. They happened 3 weeks ago, and we've had 30 Fed presentations between then and now. So they're old news, and they've been hammered to death. How are they all important? Nevertheless, they'll build a whole day around it with experts coming and telling us what we're going to read in it. So use your brains. Use logic. The media is not where you get help. How do you get help? Get educated. Trading groups. So I have an overhead. Things you can do to level up your game. And on it, it says a few things. But number one thing is never take a position ever without a specific reason. So if you come to me and say, I bought an Apple call and it's down 40%, my first question is, why did you buy the call? New people will go, what? Yeah, give me the reason you bought the call. I'm not pushing back. I want to know if that reason is still there. If it's not there, then why are you asking me if you want to stay long the call? You should be out of the call. Let's say you bought a call for the earnings and the earnings came and left. Let's say you bought Tesla calls for the Sunday update on how many cars they delivered. I don't know if they delivered any cars, but it's an important number, right? And if the number comes and goes and the stock doesn't move, why are you still in that call? So have a specific reason. And if you answer, I thought it was going to go up, that's not a reason. That's hope. You hoped it was going to go up. Why did you think it was going to go up? Give me a reason. Okay. So when I take a position, it's most often that it's falling into support and I'm leaving room for error. And so even if I'm wrong, I'm not going to get hurt right away. So number one, have a reason. Have a reason. Number two, set an exit strategy. So when you buy something or you sell something, you tell yourself, if this happens, I'm out. If that happens, I'm out. So if bad things happen, you should know how much pain you're willing to take and nothing more. So for example, if you risk $1,000, you say to yourself, I'm willing to lose 200 max, and then you exit. Or you say, if I took a position on a support level in the stock, when the support fails, I should be out. That reason is gone. Why are you still there? Conversely, if things go well, you say, my target price is here. If it gets here, I'm out and I'll leave a couple of trailers on. That's how you exit strategy. Super important. Another thing is don't trade alone. Trade in groups. I have a great group, almost 300 people every day, all day. I promise not one jerk in there. And they share setups. They share the trade setups. That is amazing. You know how scary it is to share trade setups? I know, I do it every day. It's scary. So get on board with a group. If not mine, find a group. I promise you, not one that will work harder than me. Getting the group together. We are in there more than 9 hours a day. You can go find my Twitter feed and you'll see me post another 9 hours and 20 minutes a day. So don't trade alone. You'll make fewer mistakes. Imagine when you say, I'm thinking of going long Apple. What do you guys think? You will get 300 opinions if you're doing something wrong. No, there's this, there's that, there's this, there's that. Don't forget earnings, don't forget dividends, don't forget this. So it's a camaraderie that is amazing. So speaking of Twitter, that's me on Twitter. So I had a copycat last week. Am I ever assigned shares from my 15 delta short puts? Sure, I've been assigned shares. I'll share with you a setup right now and a story where I wasn't assigned shares what I should have, and one where I was and I shouldn't have. But anyway, so don't trade alone. All right, so somebody's asked me, was I ever assigned shares? Let me tell you how that works. Currently, I have a position in Palantir. If you don't know what company is this is an artificial intelligence company, right? It's been in business a long time. It has a lot of haters, and the stock is falling out of control. And I'm long. By the way, before I forget, this was the earnings reaction. When live, the market fell, I said, this is a buying opportunity. I would buy shares. It was down here. That was after hours. And then the next day, I said, wherever it opens, I would sell covered calls immediately if I still didn't sell the shares. Anyway, Palantir, the stock. So this is a small cap stock. And if you remember, if you were with my group, they went crazy after the 2021 spike into the holiday season of 2021, and then we crashed and we never stopped. Everything looked like this, right? From Bitcoin to everything, small caps looked like this. So Palantir bottomed. So I went long via shares and sold put spread. What does that mean? So let me explain to you the position. So my fundamentals is that it's almost $2 billion worth of income right now a year, and it's growing sales. Now, it hasn't set a bottom. It's trying to. This was a low that I wish I had gone way bigger. And this was a higher low, and then they made a retracement lower here, but not lower than this. So they're fighting for a base. Last week, the market was terrible. They had 2 or 3 strong days, like big up days, when the markets were falling apart. So there are sellers hiding here. Okay, so I bought shares, 20% position. I sold a put spread. So I sold an $8 put and I bought a $7 put. The price went below both. I was not assigned. There's time on the clock. I still have 20 days on the clock, I think. Just about. So if I'm assigned shares, I will keep them and I will sell this one for profit. This way I break even somewhere here. No issues in my book. Then with my shares, I would be at half position. So I would sit and wait. And if Palantir does this, I will add the other half below 6 somewhere. And I will sit and wait for 2-3 years. That's my investment in Palantir. So far, I'm down on my shares a little bit. No issues. I'm only 20% invested. I'm down on my credit put spread. No issues. I'm not going to defend it. If they give me shares, I'll take them and run. And I will sit on them for a couple of years. I don't think I need to, but I'm up to a couple of years. I would still sit.
Hey, Nick, just want to give a big shout out here to our newest family member here, Jake. Welcome to the family. And just want to say something here really quick, folks. Anybody that joins live will get bonus trade alerts and bonus strategy videos there from Nick Shaheen while we're live. That's right.
Cool. Yep. So the idea is to be on top of your risk and have a plan. So the question was, do I get assigned? I would. I'll mention another story. The letter X, US Steel. During the pandemic, I made a mistake trading it, and I sold puts in it early, and then I immediately regretted it. So I defended myself. Where is the pandemic? Okay, here. So somewhere here, I sold the $9 puts in X, at $9 for July. And then I immediately regretted it. So I bought $8 puts for April 8th. And then price went like this. It went under 5. I was short at 9. They never assigned me shares. So when it fell down to 5 and lower, I said, screw it. I'm selling this one for thousands. So I made thousands on my protection. It cost me 20 cents. I ended up, so it cost me $200 and I made thousands on it. And I waited, and then price did this. And when price got to here, I bought this one back for 1.2, so for $1,200. So I ended up making thousands because they never assigned me. On the other hand, I remember the first assignment ever was a stock called SU, and I got assigned at 30 because the stock closed at 30.01 or 29.95. And I woke up on Monday panicking. Oh my God, I have 1,000 shares of Suncor, and the stock was up $1, or 2,000 shares and the stock was up $1. I sold the shares for a profit. So you get assigned. It's not a big deal in my opinion, because I never sell risk into stocks I don't want to own. It makes it easy. Makes it easy. What type of cover call? Okay. Somebody's asking about a covered call. Okay, we can do that. So let's see. Tesla. Funny story. Benzinga and I have been working since 2011 together. I don't work for them. I choose to work with them because they're great. They promise stuff, they deliver, and if they don't deliver, you can call them on it, and they're stand-up company. They come back. That's why they're doing what they're doing. They're kicking ass. So here's the deal. Jason Raznick, he's, I believe, the head of Benzinga. On one of these shows, he came on board and said, help me make money off my Tesla stock. So we went into Tesla, and I said, okay, what do you have? And are you active? Can you pay attention once a week? He said, yes, yes. And then I shared a trade for him. And it was a covered call sale. And he came back, I don't know, 2 weeks later, 3 weeks later, Nick, he jumps in, sits on the chair in front of the camera. I want to thank you. You made me $2,500 out of thin air on my stock. So when I own an asset, and an asset can be shares or it can be a simple call, I can put it to work by selling stuff. For example, if my brother owns shares in Apple or Tesla, I would tell him, listen, you're sitting on them. Why not put them to work? Sell a call up here and collect thousands. Do it far enough, you're not active. So what's the worst case scenario? Tesla does this, and he has to sell it here, the shares. So he profits from here to here, and then he keeps the money he collected, so he misses out on anything above here. That's called a covered call. I can be owning shares, or I can do it if I own calls. What? Yeah. If I bought a call out to, say, next year, here, I can sell calls against it short term here, 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 here. These are called diagonals. I can sell those calls. So if these calls die, they'll be dying in my favor, and the money I collect from them, gravy. I just lowered my price into Tesla. I lowered my price because every time it dies, that's money in my pocket. So if I paid 1,000 for this, I paid 950, I paid 900, 850, 800 every time I sell one. These are covered calls. There's more to it, but that's the concept. What do I think about CHNG? So I'm not going to start with that stock, but let's start with stocks. Let's say the market is open, ding, 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 and we're talking, and I'm on the SPY, and I have a 5-minute chart to start the day, and then we go into 1 minute for fast trading, and then we go into 15 seconds. What? Yes, we track 15-second charts. Why? Then we see 4 times as much information as the other poor schlep. Look at this. Look how many calls we get right during the day. Arrows that come to fruition mostly. Target zones that come into play. Look how important that target zone was here. So check it out. Look at that circle. So, we define the channel. So I tell them, don't be buying calls up here. Don't be buying puts down here. And we say, expect sellers. The rallies were going to be sold. So we track the action. And then somebody pops in, hit me with your ticker. Give me a few tickers and I'll pick one or two. Not CH and G. I want something more. I don't even know what that stock is. Snow, laser, CLF. Not the best stickers. I mean, I'll do them, but I'll do snow for sure. That's it? Okay, we'll do snow then. I choose snow. This is where I say, what's your time frame on snow? Are you a fast trader? RK, I can answer it without looking. If you can't see my screen, that's on you. Refresh or try a different browser. That's usually what it does. Fast trader. Okay. So snow. On a daily, it's trying to establish a higher low trend. That's pretty good. That's better than what the markets are doing, right? The markets just lost their June support. So snow from that perspective is doing better. So I will go to 1 hour because I want to answer his or her questions correctly. So there is a target around 183. So if I'm long, I would stay long as these supports hold. I'll go to 30 minutes. I'm drilling down for faster and faster answers. It has support at 168 and 166, and it needs to break out of 179 in order to get to 188. If I go to 15 minutes, the bears are starting to get a hold of it. So rallies into 174 are going to find big sellers up there. We'll go to 5 minutes. So on Monday when it opens, it better bounce off of 168.4, and it will find sellers, I think, at 173.7. 173 to 173.7. And if it ever gets to 175.5, I would get out of my longs on Monday for fast trading. That is my snow setup. You're welcome. And it sounds like Alan knows what those things I just said meant. Alan, I think you'll have a blast. If you have the funds right now to join the group, I promise you the value is there. And if you think about it, you have a class open 9 hours a day, 7 days a week if you want to, in the chat room and for a whole year. Okay, what else do we have? RK, I can tell you real quick on RK. It's worth along with a tight stop. What does that mean? It's onto a hard bounce level. I'm going to get long RK with a tight stop. Who shouldn't get long RK? If you're long Tesla, you're long RK. If you're long stocks like Peloton and Spotify and Square, you're long RK. And Roku, you're long RK. Don't add. So if you're long any of those stocks, don't get long RK. Diversify your portfolio. So RK is hitting the floor. It either falls apart or it bounces hard. ARKF similar, but I think RK is dollar is smaller, so it's cheaper to get long. It's not a cheaper stock. It's lower money out of pocket. One of those two. I can't remember which one is which. I think RK
Nick,
is the lower one than
RG. What about energy? What about energy and with what happened with the Nord Stream?
Okay, energy. I've been shorting energy on every pop, and we won a whole bunch for the. So I'm looking to short the next rally. It's too soon. I haven't reshorted. Oxy, I've shorted the hell out of it. And I think people who are buying the stock that thinking they're Buffett, they're going to lose money. Buffett is not buying the company. He's not buying to make money off the stock. He's buying to get the company's cash flow. Not the same thing. Don't invest like a billionaire. You are not a billionaire. You cannot invest like a billionaire. He's a genius, but you don't have his money. So don't invest like him.
Right.
I've shorted Oxy on every rally, and I will short the next rally too. But I haven't. The last short was the XLE, and if XLE spikes again, I will short it. I'll show you where my levels are with the XLE. If it goes to 76 or 78, I will short it again. Harsh, short. Buy, selling, call spreads. I never short the company outright. Please don't do that. You can buy puts spreads, sell call spreads. Those are easy shorts. You risk this much to win. If you lose this much. Don't short outright. All right, next, hit me. Let's go. Bitcoin, awesome. Okay, so actually Bitcoin, I've been tracking it all weekend because it will tell me how the market is going to do over the weekend. Oh, we just took a dump. So listen, so if somebody looking at the futures, let me see here. Are the futures down? What's going on here? Why is this not working? What time is it? It is. It's open. The futures are not down? Amazing. Huh. Okay, so back to Bitcoin. I'm a fan of crypto. I'm not a super fan of crypto, but I find it funny of people who make fun of crypto. Friends, You will be dealing with crypto in your lifetime. I guarantee it. I guarantee it. Whether you're dealing Bitcoin or not, I don't know. You will have transactions, all of your transactions in the future done in crypto. Everything in your life wants to go digital. Look around. Everything. The light switches, the cars are all digital now. The companies, your position, you're commuting from work to work from home through digital stuff. You're not even leaving your house. Everything is going digital. Why money not going digital? It will go digital. You think the governments are going to reinvent the wheel and find a different way of moving money around electronically better than crypto? No. You're going to be dealing with crypto. These are the things that are making it happen. So I'm invested in Bitcoin through Bito, and I'm invested in Ethereum and Solana. Longer story. I can explain them, but here's the story. The riskiest part of Bitcoin is where to put your money. Which company do you trust? Because they're not FINRA companies, right? They will become. So do you give it to some company, Qcoin in Malaysia or wherever they are? Or do you trust wherever crypto.com is? So now we have some US-based companies. Like I know you can trade Bitcoin out of, I haven't done it, Tasty Trade, Tasty Works, whatever that's called. But here's the thing. You can trade Bito, which is an ETF that tracks Bitcoin futures. So I've recommended Bito purchases several times as trades, and they paid pretty quickly. I would sell Bito puts every week to buy Bito. I own a little bit. I want to own a lot more. So trading Bito, you'd be trading crypto minus the biggest risk of crypto, which is where to put your money. The price of Bitcoin is not the risk. It always bounces. And I cannot wait for it to, quote, crash and go to zero the next time. I will load up because all of my trades on Bitcoin have been on crypto have been super easy and very simple and straightforward. Big crashes, when the taxi driver tells me something about Bitcoin, it's time to do something with it. If it's rallying, it's time to get out. If it's falling, it's time to get in.
Right.
So that's how it is.
Nick, and really, I think it's important to note for everybody here that even if they're scalping or doing weekly, monthly iron condors or buying calls and puts, whatever strategy, you pretty much cater to all of them.
Whatever strategy you have, you need chart intelligence, which we have, options data that tells you price action, which we have. We have people who know Elliott wave, who know Fibonacci, who know fractals, which are basically, I think, pitchforks and stuff. I specialize with really simple levels. Levels rule. I'll take all the other input on top of levels, and then I go to the options and I get all the data, which is exactly where the money is. It is so freaking accurate. It's unreal, but you just need to be able to read it. You have to read the data. So the help is there. You will be a better trader. I promise. This is a promise I will make to you. I guarantee it. And guess what? If you don't agree, Benzinga will give you your money back. They'll give you 30 days to evaluate it. And if you do sign up, please take the 30 days because it's unfair to judge it after a week. It's confusing. There's so much going on that you may feel overwhelmed and your mind shuts down. So when you jump in, the first question you get is like, what was that? Ask me. You can DM me and I'll answer it. And then you'll have one less question. And then you come up with another question. What was that?
Deepin has a question basically asking if I join the group, can we get to talk to Nick or is it just chat managing $1 million fund? Well, I mean, Nick, you pretty much yeah.
Hey, you can talk to Nick. Managing $1 million fund. It's easy to make money out of options when you're managing a big basket. So we will talk. I'm not going to help you manage the fund, but I will tell you which trades I would take. For example, when Tesla is falling out of bed, I love selling puts for a rebound. I don't battle them. I go down 20, 30, 40%, and I sell a couple of puts, make $2-3 grand overnight or in a week. That would be how I would do it. There's plenty of ways to do it, to use a big size account to create consistent income with options. So the idea for me is to create consistent income. Maybe it's an overlay. Let's say you're a good stock picker and you invest for the long term. What's wrong with making money off of the assets you own by selling covered calls or things like that? What's wrong with some stock replacement strategy? Let's say you have 100,000 tied up in the stock out of that million, and you'd like to take that off the table and still be long the stock, there are ways to take the risk off the table and redeploy with a stock replacement strategy, or buy puts with no money out of pocket. Or if you're buried deep in the stock, there are ways and options to double down without putting a penny out, maybe even be a credit on a double down scenario. Tricky, but it's doable.
Right.
There are other ways of doing that.
So there are strategies that you implement in the chat room for small accounts, growing small accounts, or large accounts. But honestly, I think the Iron Condor is amazing. That daily Iron Condor.
Yeah,
that's great stuff.
I love it. It keeps us busy. It keeps us hooting and hollering. I kid you not, they'll be clapping at the end. So this gentleman is asking if we can talk. You can't talk to me, but I can talk to you. So if you can type and I can talk, then we're talking, then we can converse. I cannot advise you on your own portfolio step by step, but I can advise you on trades, and I'll tell you if I had that same scenario, this is what I would do. So if you're concerned about a couple of trades, yeah, we can discuss those trade setups and how we can make them better, and new trade setups. I have thousands of members with Benzinga. I can't do that one-on-one with everybody. But if you're in the room and you ask me a question, I certainly can help. All right. I'm talking to one of the members right now. Okay, so give me another ticker and let's keep going.
All right, let's do Nvidia.
Nvidia, I can do it blindfolded. Okay, not my favorite stock because of how much love it gets and how expensive it is relative to its cousin AMD. And also the whole sector is plagued by delivery delays and supply constraints and all of that. So if Nvidia is rallying, the stock market in general is rallying. So I would want to avoid the Nvidia specific extra problems. So success comes if I can eliminate all the variables, as many variables as possible, then it becomes easier for me to say, okay, I'm not going to get shellacked, right? Out of surprise. Let me show you a sobering chart with Nvidia. If you've seen this before, I apologize for repeating myself, but hey, I get the same questions. So this is a head and shoulders. This is the target of the head and shoulders. I'm eyeballing it. It should be as big as this. So here is the target of said head and shoulders, right? This is another neckline that they just lost. The target of this one, I'm not going to even put on the chart. But here's the statement. The sellers are in charge. So the next rally, they will sell. So if you get long Nvidia and you catch a rebound, I would get out here. As long as Nvidia is under 200, it's in the hands of the bears. Look, they fought over 200. They lost it. They tried to recover it right here and they lost. They tried to recover it right here and they lost. They tried to recover it right here and they lost, and now they can't even come close, right? So if they do come close, they're going to be a huge fight at 200 again. Same exact scenario for AMD, so don't bother asking. So I like this, and I like these. So how do I go long Nvidia right now? I would sell a put spread down here and create income out of that put spread. Let them fight it out. I don't give a crap. Let them fight it out. Up, down, up, down, up, down, up, down. As long as it stays above 80 or whatever number I end up with, I'm happy. Okay, what else? Let's take another one. I love this. You guys are great.
Let's do I think it's FSLR, First Solar. Yeah.
I haven't looked at that.
Whoa, massive
what
rip.
the hell is that?
Yeah, they had some good earnings.
Oh my God. Yeah. No, listen why I say that. I want to say 2 months ago, somebody came to me, they wanted to short it. I was like, you know what? I'll tell you the levels to short, but I promised myself I wouldn't try to short companies. Whoa. Okay, that is, you walk away. So First Solar, I can tell you the easy statement. This is not an obvious entry point. This is the statement. I wouldn't touch it. This is a stock where if you love it, you say, fudge, I missed it. Put an alert here and say, wake me up when it comes back to 100. If it doesn't come back, you missed it. There is no way this is tradable up here. Look at this. What the hell? Yeah, you missed it. So any dips into 100 are buying opportunities. Look, Have you heard of resistance, breakout? So it becomes support. This is a monthly chart. This is 1 month, 2 months. Look how many months where they did not want to close down here. So that is bulletproof support. Look, this was complete support until it was collapsed, and then it became resistance, and now it should become support again. So dips into that support will be reason to chase it up. So if you missed it, do not get engaged here. Look left every time. Last time it was here, you got shellacked. You don't want to bail these fools out. Whoever was here stuck for 11 years, they just got their money back, and here you come. Okay, I'll take that bag. Thank you very much. And you take that bag of poop off their hands. Nope. Bank of America. Okay, so I remember Bank of America. Ask me why. Go ahead. Ask me why. No, you don't need to, because it's right there. BAC. I thought that BAC is an opportunity to get long against this weird candle they have here. Buy the dip opportunity 3. It worked before. I can get long based on the same concept. Forget what the market is doing. Forget what this chart is. This is a 1-hour chart of company ABC. In this case, it's BAC. How funny is that? I can tactically go long against this. And because I said I'm long against that, if that fails, I'm out. I know my exit strategy. I'm willing to take pain from here to here. Bye. I lost. I get out here. So, and the upside, there's a lot of sellers here. Then my dip, a lot of sellers here in my dip. This is target 1. This is an opportunity for BAC against this support. Trading comment, not investment comment. XLF provides about the same opportunity, which is, but I want to caution you. I think the banks start reporting earnings first, so I don't want to be long into earnings. Wells Fargo, probably the same way. I have not looked at Wells Fargo. Nobody asked for Wells Fargo. It's even better shape. It has support below. It has resistance above. So if you want to go long, Wells Fargo, fine. I don't have a reason on the chart for it. Higher lows, that's good in a tough market, but there are a lot of sellers up here. So I don't have the same thesis on Wells Fargo. Microsoft, okay, great company, obviously, fundamentally. I'm aware of the fact that the sellers are in charge short term. See how they sell all the rallies? Wow, look at those candles. Those are hourly candles. So rallies into 242 are going to be sold. And I think the value area is about 222. What do I mean by that? I don't mind it. The company is great. What I do mind, pre-COVID, still up here. They just lost this beautiful support. So I would feel comfortable if they recover 240, 241. Arguably, okay, the pivot is around 220. That's why I said 220 is the base. Look, fail, breakout, test for footing, and gone. They haven't tested for footing again, that guy. So I would sell a spread here and stop out. Again, earnings are coming. You have to pay attention to that. Also, look, they lost the moving averages. So now rallies into the moving averages. Any rally into here will be met with sellers. What do I mean? Look, who's in charge? They're selling rallies. So when you get a rally, you instinctively sell. If we get a rally, look for sales to do this. And then if you can hold this and bounce, then you can tackle, boom, breakout, or make a new low and repeat, and make a new low and repeat. That's how we did. Look, they look the same, right? Triangle, lost, triangle, lost, triangle, lost, until you beat this. They didn't beat this. They didn't beat this. It's all the same. This is a weekly comment. I can say the same thing on the 1-minute chart. Let me see if I can to prove it to you. This is a 1-minute chart. Same thing. Look, we'll do the same thing. Bears are in charge of selling rallies. Rally sold, rally sold, rally sold. If we get a rally, they're going to sell it. So here, they came back. They couldn't hold. They tried to recover. They couldn't. They fell new low. They came back. They couldn't take out the prior fail. They lost. When they come back, can they repeat it? Same thing. Exactly the same thing. So that's what I said. Comments on the 1 minute or the 1 week. It doesn't matter. It is what it is. It's always the same. And I say it like 6 times a day. per ticker. So you will get it. You will get it. All right, I'm checking up on members who are from Florida. I reached out. I haven't heard from them. I was like, please tell me you're okay. And they're just answering me now. This person made it. Okay, what are we doing next? So let me tell you this, closing remarks, because I think we're running out of time. It's late. I'm tired. I need to go do a video for the members and they're waiting for it. Don't trade alone. Join a group. My group is open. I can't take too many people, so get in before we shut it down. Shut it down like for new members. So we have a good push going on. We're adding new groups, new people. I forgot to bring the testimonials. I promise you there's tons of testimonials from people who joined last week and the week before that. And they already, one of them said they already paid 20% of the whole thing. Hot Rod here is helping us put this together. He will answer all the questions if I leave and he stays behind. He usually does. I don't know about today. It is Sunday. We have the opportunity to educate and level up your game. So the goal is when you join my group, I hope that the first question is like, where are the trades? I hope is, where do I join the room if I can? And where are the educational videos? And how can I learn this? And how can I learn that? Okay. Because I put more emphasis on education than anything else. I can help you figure out not how to fish, but which fishing pole you need to use is best suited for you. Not everybody can do the same thing. I cannot trade fast. I will make a lot of mistakes because I'm helping so many people. The other day I bought calls, they went green and I forgot I had them and they expired worthless. It was like $180 or $150, I can't remember. And the bell rang, I was like, okay. So there we go. So I resolved myself to just doing credit spreads during the day. And the other day, I'll give you a real story. I promise you, I think it was Wednesday. Alibaba was having a bad day and then it reversed. And a gentleman, James, he jumped in and he said, I like Alibaba here. So I said, okay, I'll buy calls. And I said which calls I bought. I bought $79 calls in Alibaba. Last lesson. So I bought $79 calls in Alibaba for October 21st, which is the monthly. And you can't see my screen. And so, and then the stock rallied. Those calls gave us 45% in an hour win. So most people booked it. I said, I'm eager to book it, but unlike you, I took one for 3 weeks out. Most of them took one for this week, shorter term. So they profited a little bit faster, but they need to book it because it dies faster. So what I did is I sold last week's calls against them. And those calls died in my favor for maximum gains. So what I ended up doing was booking profits last week, and I still hold the call. So now the call is green. I am green in the call itself, and I booked money. It's off the books. It went into my account. I got $50 per contract, actually a little bit more, for selling the $83 call for last week, and it died in my favor. Alibaba closed $79.99. I could have gone more aggressive and collected $120, but I went the conservative way. So Monday, I can sell another one for this week and collect another $50 to $100. So that means the $400 I paid for the call that is worth $5 and change right now. Last I checked, maybe $4 and change. I would have paid $400 for or under. So I've already booked and booked and booked, and I still own the call. So I can sit on it another week. Anyway, all right, out to you, Hot Rod.
All right, folks, sounds good. Nick
David,
Shaheen,
we're not separate from Benzinga. I am not an employee of Benzinga. I am my own guy, but I work with them hand in hand. I've been with them for 11 years. I'm not going anywhere.
Nick Shaheen.
I am them, they are me. I trust them implicitly with everything. So, yes, that is worth because listen, in this day and age, trust is pretty hard to come by. But you've seen them. They're a great news aggregator if you have their platform. They're a great educator. They provide opportunity for regular people. That's how I found them in 2011 through education. And we've been doing that since then. So I'm here.
Right. Yeah. No, I remember when we launched the chat room, it was just you and me, and now we have over 350 people there live, which it's great. The progress that the members see, the community, right? Being there, like creating relationships, making friends, all that stuff, man. It's definitely a good thing there. Definitely.
Definitely. All right, sir. I'll leave it in your capable hands. Thank you very much. And I'll see you tomorrow.
All right, everybody. Big shout out there for Nick Shaheen. All right, I'll see you in the chat room, okay? Folks, everybody that's here, I'm gonna do a quick walkthrough for those that joined very quickly, right? So this blue chat room, it's the static chat room. It's open 24/7. It never closes. We do have an international community, so we have people from all over the world, not, you know, like Canada, Europe, Africa, everywhere pretty much. So in this blue chat room, right, you're gonna see two channels here. All right, yeah. So inner circle chat is where everybody's posting. Basically, everybody there is just hanging around, talking about trades, research, sharing their own research, sharing trades, pretty much an entire community engaged the whole day. Right now, you can see there's 76 people that have it open. This, right? So inner circle chat, everybody can chat, including Nick. It's the, you know, conversation there. Then you have Nick's important messages. That's where you're going to go to get all Nick related posts that he does for the members there, right? He's talking on both chat rooms, but in the morning, you're going to see this post right here. It's pretty much every morning, right? Around 8:30 a.m. Eastern. And it's going to have this link here, all right? Live session. So this is where you have to click so that you can attend the live session with Nick, which is about 8 to 5 Eastern, and he's sharing his screen, talking with the members, all that sort of stuff. So this is the link that you want to use, right? This is what you want to use. The other thing is that make sure that you fill out the form with the address that you want the laptop to be shipped to. And anybody that does join today basically gets entered into a raffle for our next event. We're going to have an event in, it's going to be either in Miami or Manhattan, basically like a get together for the chat members. So we're going to be giving away some tickets for that, for, you know, pretty much a raffle, right? And for the people that join. And I think that covers it. Just make sure that you're in the session, make sure that you're in the room tomorrow morning, because there's a lot to cover. We're pretty much following up from last week, and it's going to be a volatile week. So you definitely don't want to be trading alone, especially not right now. So the other thing, you have SPYs, Qs, IWM, futures charted in the morning as well. I'm going to, as an example, I'm opening this one. So you have everything laid out, right? And you can make trades literally just from looking at this chart, just from this. So, all right, folks, thanks a lot for being here. We'll see you guys in the chat room tomorrow. If you do have any questions, send an email or call. We're going to put the contact there in the chat on the Zoom side and on the YouTube. So, all right, folks, everybody have a great day. Thanks for being here, and we'll see you in the chat room tomorrow.